You alright, guys? Welcome to the live stream. Let me get the links out to the groups, and then we can dive straight into it. It is past the New York Open, so 17 minutes over, or into the training session. So we got a little bit of price action. We'll see. We'll go and do the market update and analysis shortly. Let me just get all of this stuff out. Here we go. Beautiful, beautiful. Okay. Get rid of that. Discord. Public lounge. You alright, Ozzy? How you doing? Alright, beautiful. Links are out. Those that are joining us, welcome, 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 welcome. Yeah. How are, brother? Yeah, I'm good, mate. How are you? You okay? Let's see what's happening. Getting a little bit of price action. Now, so I've been taking a few calls, obviously, for the one-to-one mentoring with members. And obviously, we kind of go through kind of the Bitcoin chart. So we use that as an example as we are going through. And obviously we kind of start very from fresh, from start to bottom, basic support and resistance. And yeah, it just kind of goes back to how useful just starting a fresh chart every now and then, and how it can maybe you can pick up on things that you may have necessarily missed. Now, all-time high back here. Okay, nice trend line. Held. Okay, look at where we are right now. There is a lot of orders at this point. Just look at the amount. Okay, so we are at a very, very, very strong point on this chart. So are we going to break, or is this just testing old support into new resistance and a complete turnaround? There is a lot. It's a key point on this chart. Got that 200 line in absolutely perfectly with that level. Okay, so we are at a very, very key level on the chart. We got 1, 2, 3, 4. Bearish. Where are we going to next, guys? It's simple. Well, I say that if we break, we break, but at least we know what we're dealing with at that point, right? Getting nice amount of volume ticking up on here, seeing an increased amount of sell side, which is fantastic. But yeah, this is a very key point on this chart. So there's going to hold a lot of strength here, a lot of strength. So, yeah, it's looking like we'll hold it and then just continue its way down. So let's. There's going to be some very, very, very nice positions here to be taken an opportunity of, and once we do turn around, guys, you can look for lower targets rather than just playing it very short and just taking profit as soon as it hits its first level of strong support. You can look and expect much lower take profits, just because you're also kind of getting in at a perfect point, right? So obviously you have your lower low, lower high, okay, and we're continuing to do that. Yep. So this is a very, very good entry. If we do manage to turn around, it's going to turn around heavy. You can hold on to it and play it to the next lower low. But yeah, things are looking very, very nice. Very, 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 very nice. But yeah, just wanted to obviously touch base with you guys on that. Yeah. Again, going back to the point, it's useful. Just starting fresh, just get everything, just kind of get a new Bitcoin chart on your screen, get everything off there, and just start from fresh. Pull the chart back completely, and then kind of have a little bit of a different perspective. Sometimes you can get lost with the noise on the slightly lower time frame. Okay, but yeah, so dollar index is the next one. Let's have a little look. So we had a very, very nice push back up. Let me get rid of everything. Okay, strong level of previous resistance, new support. Okay, so pushing is whether we're going to hold. Ideally, we want to start seeing some nice movement back up. We want to see that wick kind of come into play. Again, strong support. It's just whether we can hold. Obviously, we got weaker CPI. That's going to play into it. We've already fallen down a great deal on the dollar. So was this kind of the last push, and then we're going to accumulate again for then a larger move back down? Who knows? We'll have to keep a close eye on it, but I mean, yeah, it's definitely, I mean, turned around heavy. It's got quite a lot of space to move into, but yeah, there's a nice amount of orders being held here after kind of this area. Let me get this back up. After this area here, be looking. So there's quite a nice concentration of orders here. Okay, this will be natural level of next support. 1618 is lining quite beautifully with that. At the moment, we have just found sensitivity just above that 618. As you can see here, kind of held that 0.5, breached it ever so slightly and moved back up. It is in a order block, so let's see whether we can hold and start moving back up. Again, it's Friday, last day of the official trading week, so normally you get volume slowing down and kind of a turnaround in markets. So we'll see how things are playing out here now. Nasdaq, S&P, Russell all down for the day. Seeing some sort of top formation forming here, which is nice. Okay, we just need to start breaching through some of these levels of previous support to really confirm it. S&P kind of really does, it's taking the lead here. So yeah, things are looking good. Things are looking like they're going to start turning around. I mean, the equities, as you can clearly see, have come up to resistance and failed to break out, and now turning around quite nicely, which is always a good sign for risk on assets and crypto. So yeah, let's see how things playing out here in terms of kind of the current on the lower time frame sort of analysis on Bitcoin. I mean, it does look like we potentially could see a bit of a fake out on the top. We are currently pushing up a little bit higher, which is completely fine. Again, the market update that we sent out to the premium group explains all of this. Yeah, could see obviously brief breach, push up, fake out, and then come back down. Sellers are starting to pick up. Supply is starting to pick up. Okay, so that's something to bear in mind. I mean, yeah, well, we're half an hour into the New York Open, seeing a little bit of a spike up. Have a little look on. Okay, yeah, so dollar is going to build up some structure. Still looking for that support. Saw a very nice reaction here, in fact. So see what it can do. Yeah, we just need some of those sellers to really start spiking up on the 1 hour. That would be lovely. We are seeing an increased amount. So you could see it today. Again, talking about the fake out on the top and then a push back down. It's very, very likely. This trend is very much overextended. Very, very much overextended. As you can see, obviously we're looking to hold that 200 on the daily. So we'll see. Things are looking good. Things are looking like they're coming right to its end. Profit taken right here, as you can see. Nice spike up in volume. So yeah, some of these balls are getting out and slowly going in and entering short. So bear that in mind. Okay. Yeah. Apart from that, that's about it on in terms of our analysis. Yeah, not much left in it. What did we want to go and check out? We wanted to check out 618 lines up beautifully there. So, I mean, guys, we've got quite a few levels of confluence here. Let's have a look if we can get. Bap, 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 bap. Nope. Yeah, that one fib is all the way up here as well. So it does look good. This area here looks very, 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 very nice to hold. Bam. Let's see. Let's see. A whole load of levels to look at. Lots of confluence in this zone. So yeah. We are looking good. See how volume peaked here and now it's struggling. Peaked and now coming down. Let's just switch up. Peaked just here. Peaked here. And now we're going to get some divergence. Okay. It's going to attempt. And then maybe see some spike up in sell side. And then it's just all the way back down. Yep. Okay. Yeah. Well, that's what we're expecting. Next week should be a nice bloody week for us. And should start seeing it switch up today. Yeah, over the weekend. Just need what's the implication is coming from is the dollar, okay, and what it's doing. That's where kind of it's prolonging Bitcoin's turn. So yeah, keep an eye on the dollar. That's the important one. That's the one that you want to watch, really. But we're looking good. So we'll see what's happening on that end.
every year you've been alive, you could now afford a Model Y. Congratulations with that price cut.
That's some complicated mathematics you've been up to there. I'd like to point out that my birthday is tomorrow, not today. Friday the 13th, probably not the day to have a birthday. I'm sure it's somebody's birthday out there today. Happy birthday to whoever it is. The markets, I think, Alex, are having a fairly mixed day today. I'm sure it's the banks. I'm sure it's the banks' guidance that nobody likes today. I don't think the Tesla price cut is helping, though.
Yeah, also I have to say the S&P failed at the 200-day moving average yesterday. You know, you never like that, and it's a long weekend here in the U.S. You're not going to take on a lot of risk, but all that said, we are well off the lows, so we had some
Some
breaking
very, very nice sell side. See how the sellers are now starting to stack up. Exactly what you want to see. Tapping into this liquidity here. Bam, bam, bam. So you're starting to see a turnover here.
It looks like people do like lower inflation and the fact that it appears that growth was reasonably strong in the fourth quarter because we get the Michigan overall sentiment number jumping significantly to 64.6 from 59.7. That's well above the 60.7 that was forecast. And we see that current conditions and expectations rise. Current conditions up almost 10 points to 68.6 from 59.4, and expectations are at 62 from 59.9. When you look at household finances, 31%, an increase from December, think that they are going to be better. 25% think they're going to be the same in the year, and more people, 27%, think they will have higher incomes. So they're feeling better about their personal financial situations. Now, the inflation aspect of it, this is the interesting one because so much drives their perceptions, but the news has been good, and one-year inflation expectations dropped to 4% from 4.4%, a significant drop in inflation expectations over 1 year. The 5 to 10 year number is ticks up a little bit to 3% from 2.9%, but that's a little bit less worrisome. It's a little harder to see exactly what is driving that. Should say that the 1 year inflation expectation, the lowest today.
Get ready, a turn is imminent. Give me 2 seconds, I shall come back.
Gasoline prices. We talked about this yesterday, I think, on your radio program, that gasoline prices are starting to go up again. So we'll see if those inflation expectations hold.
Yeah, great roundup of the data. Thanks a lot, Michael McKee, joining us there. Let's get more on those numbers with Joanne Shu, director of the University of Michigan Surveys of Consumers. She joins us now. Joanne, let's start on that inflation point. What's your read on if inflation expectations can continue to go down, or if that reverses if gasoline prices start to rise again?
So consumers are, of course, going to be very aware of gas prices, but they are responding to the prices of everything that they purchase. We've seen inflation expectations 1 year ahead decline quite a bit, not just this month, but over the last couple of months. Just 2 months ago, it was 4.9%. Now it's 4%. Consumers are expecting the slowdown in inflation to continue over the next year.
The sentiment numbers are amazing, Joanne. The current conditions number has gone from 59.4 to 68.6. That feels like a very big jump. Am I reading that right?
It is a big jump, and it's happening for 2 primary reasons. One, as we mentioned before, the slowdown in inflation has really helped consumers' pocketbook. The other thing is that buying conditions for durables have gone up quite a bit, and that's because consumers are perceiving that supply chain issues have really eased up or have disappeared for durables. So both of those things are propping up current conditions.
What about the labor market? I mean, how is that helping or supporting that current sentiment?
So labor markets kind of has 2 pieces to it. So first of all, consumers, their assessment of their personal finances are also being buoyed by expectations of strong incomes in the year ahead. We're seeing a median increase of about 2.6%. That's higher than we've seen recently. And so consumers expect their incomes to be strong, and that will support their consumption going forward. That being said, they are expecting labor markets to weaken in the year ahead. The largest proportion of consumers expecting unemployment to increase than we've seen in recent months, and so they are expecting that to weaken.
Nevertheless, if I look at these data, I'm
assuming that the consumer's feeling fairly good about the world right now. I hear what you're saying. There are caveats. How should the Fed be reading this data, do you think, Joanne?
I think the Fed should look at this data and feel like their fight against inflation has worked to some extent to control short-run inflation expectations. But what we know is that the Fed cares much more about long-run inflation expectations, and that's at 3.0%. It's been bouncing around between 2.9 and 3.1 for 17 of the last 18 months. So in spite of this recent reduction in inflation, it hasn't really moved the needle all that much on long-run inflation expectations. But those weren't really all that much higher than pre-pandemic inflation expectations to begin with.
So, Joanne, what is going to move the needle on that longer-term inflation expectations? What's going to get that down more substantially?
I think it has to be a really sustained reduction in inflation. So, Guy, you were saying before, consumers seem to be very hopeful. The thing is that they're very hopeful relative to where they were 6 months ago when we saw the all-time low back in June. So overall, consumer sentiment remains fairly low from a historical perspective, just less low than it was before. And I do think consumers are still waiting to see sustained improvements and kind of uncertainty over global factors like China and the war in Ukraine to not worsen in the year ahead.
Joanne, all great points. Have a great weekend, a great long weekend. As ever, thank you for bringing us the data and the analysis that goes with it. Joanne Shu, University of Michigan Surveys of Consumer Director. Coming up, we're going to bring you the latest on big bank earnings and the market reaction. Peter Oppenheimer is going to be joining us, Goldman Sachs Chief Global Equity Strategist. That's next. This is Bloomberg.
Right, sorry about that. Let's, what has happened? Okay, perfect, that's fine. So we're starting to spike up in volume. Lovely, lovely, lovely. Just need that sell side to come in. Once that sell side starts coming in, oh hell, it's going to break loose. Nice amount. Yeah, just remember that TA that we put in. Okay. See how it reacts. No, 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 no. That's your ceiling. Very, very close.
Expecting a bit of an ugly season.
People may be overly pessimistic.
We know growth is slowing.
Companies are going to have a lot of questions to answer.
Bloomberg breaks the numbers first.
Tons of banks coming out.
Some of the worst returns when it came to profit. Markets really like that number.
With exclusive expert analysis.
What's your confidence in your outlook?
You gotta be selective.
We still see a lot of opportunity.
There is a light at the end of the tunnel.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
So, four major banks in the United States out with earnings today. JP Morgan, Citigroup, Bank of America, and of course Wells Fargo. They offer an insight, I think, into how consumers and companies are faring during these challenging economic times. So here with the top takeaway from Wall Street from a macro perspective, our Wall Street reporter.
When you look back so far, you do have net interest income increasing, but there is some pressure ahead when you look at these loan books ahead for the big banks. If you take a look at it, you also see some headwinds, for example, because you'll finally start to see deposits once again. Remember, rates were next to nothing at a lot of.
Here we go. Here we go.
Potentially going up finally this year at some of them, although the final levels are TBD, to be determined. And when you look at it also, you also see provisions for loan losses, very importantly here, starting to tick higher as well as charge-offs.
Here we go.
Things that are very drastic, nothing prices.
See how these sell sides are starting to come in hot.
On one hand, it's good that
Exactly what you want to see.
reserves behind them, and it shows you that these banks are willing to take on risks, particularly in the credit card books. I will also say, interestingly, you are seeing some cracks when it comes to corporate borrowers as well, as you see some of the banks starting to show you not only a drop-off in debt underwriting, but also some pressure when you look at businesses like the premiums on credit default swaps rising. That shows you a little fear baked into the market. So not all in paradise. You definitely see that reflected.
Let's have a look if we can scout anything for today. Zill's propped right back up. Zill's looking nice.
Have announced in the past, but at the same time, there's clearly some pressure ahead.
Just in terms of broad strokes, what we're hearing from the CEOs on the calls. Recession, mild recession, what's the overwhelming takeaway?
I like the look of that.
They said over at JP Morgan, it very much matches what they said over at Citigroup. This is a mild recession. They also about it could get worse. The Citigroup line has been for the last couple months remains today. You may see a rolling recession around the world, which frankly in many ways is better than all at once. So you did see it reflected in the numbers. You did see some pressure in other parts of the world more than you did in the United States. Asia in particular in the fourth quarter, which could start to ease up this year. So mixed bag, but mild recession fourth quarter.
Just have a little look on the high time frame whereabouts it's laying out.
In just a few, Bloomberg Shine Bassick joining us there. We're going to have more on those bank earnings. We're also going to interview with CFO Wells Fargo. That's coming up at 4
Just left the gap.
New York time. All right, broader macro here. David Kostin of Goldman Sachs out with a note telling investors it is best to prepare for a hard landing.
Alright, let's stay out of that.
He writes, the painful investment lesson of 2022 was fine to hope for the best, more profitable to invest for the worst. Let's get Peter Oppenheimer's take, Goldman Sachs Chief Global Equity Strategist. You agree with that call? I don't even know if I can ask you that question, but if you agree with that call, you want to prep for the worst as how you're going to make that kind of return. How do you do that right now?
Yes, hello. Well, of course, I certainly agree with it, but I would say it's important to distinguish here between the financial markets and the economy. We do have a relatively positive view on economies globally. In fact, we're not looking at a recession in the US this year.
This is nearly ready. Nearly ready. It's just building on that. So we could get one last push somewhere around this zone and then plummet. That's looking nice.
Because of that strength, interest rate risk remains higher than the market is pricing. And that was where it really feeds into a more cautious view for equity markets. The valuations are still quite high.
Yeah, also nearly ready. See, all of these altcoins are coming up to. Have a good day. See you later. Let there be blood. Let there be blood. Have a lovely day, my man. Thank you for joining us. Yeah, beautiful. If I don't see you before, have a beautiful weekend. I'm sure I'll see you on Monday. ENJ looking nice as well. Everything's overextended. Very overextended. It's literally a matter of time before things really just come all the way down. Da, 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 da.
better than many people feared recently, and there has been some important supports that have come through: lower energy costs, the opening up of China, continued strength in labour markets, particularly in the US.
Ba, 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 da, ba, da. I like an RLC looking very, very, very overextended.
Peter, we're having some connection issues, so we're going to have to let you go on that. But please come back like imminently when we can fix the connection. We'd love to hear more of that call. Peter Oppenheimer joining us.
Lots of volume, yeah. See, she's looking quite nice, setting up.
For earnings, right? We all are
Looking very nice indeed.
and a better second half, but then you look at what happened with the banks. If you miss on certain metrics, your stock is going to get hammered. Like, so what is actually priced in, and then where is that tail risk?
Well, I think
Looking very, very, very nice indeed.
second half, but if you listen to the banks today, I don't think the banks are being marked down today on their numbers today, and I know there were some misses in terms of the numbers.
Lots of volume.
It feels like it's the outlook statement, doesn't it, that is causing the problems here today. And you tie that with Tesla, you tie that with what we're hearing from others as well. It is going to be...
Yeah, this is looking very nice. Wick. Failed. Lots of volume.
The back half of the year is better, that rates come down, that stocks stabilize.
Struggling.
And you can see a decent investing environment. I wonder whether that's now being increasingly questioned. But the Fed does sound like the message from the Fed is quite clear. We're going to 25, but ultimately we're still going to end up in the same place and probably stay there. So again, I just wonder whether the Fed's been overread a little bit over the last few days as well.
Well, I also feel like the conversation evolving, and it's not how they get there, it's how long they stay there. And just because they stop hiking doesn't mean they cut, and then that also making a difference. And Bank of America, for example, thinks that we're looking at another 10% downside for U.S. equities to 3,600 until we actually end the year higher. What's kind of the catalyst to get us there? Is it going to be earnings season? I mean,
Yeah, this looks primed.
but then you're looking at the S&P, we're only down 0.3%. So I don't know.
I like the look of this.
You look at what's happened. You look at what's happened here in Europe. Look at what's happened with luxury. That's the China reopening trade. You look at what's been happening with the bank stocks. They've had a really solid start to the year as well. You take a look at what's happening with the airline stocks. Some of the most beaten up areas have been rallying hard. The question I'm trying to figure out is whether or not you get the kind of the dash to trash early, and that is something that sticks, or whether it's just something that's short covering. Is this the start of how a normal cycle would evolve, i.e. people get back into the stuff that is least loved?
Or is this a normal cycle in any sense of the word? So, I don't know. Lots more to discuss.
Absolutely.
It'll be fun.
It is. We've got plenty more still to talk about. Let's talk about Apple next as well. Tim Cook's pay is going to be cut. It's kind of voluntarily. Investors sound like they'll be pushing for it as well. He's okay, apparently, with just $49 million in 2023. His pay's changing. Anyway, Ed Ludlow is going to join us next to talk about this. This is Bloomberg.
Ideally get an entry somewhere around 0.5. That'll be nice for a turnaround. If not, coming up somewhere around here. So we'll wait on this one, but this one's looking nice. Nicely primed. We just have to hold off. Another spike. Struggle. As we edge closer and closer towards that level. This is where your 200 moving average is held. Have a look at AVAX. I have had a look at AVAX. I mean, it did turn around. We've just lost a bit too much on it in the last few trades with it. So just letting it do its thing. But yeah, you got a little bit of a range forming, kind of similar structure to Bitcoin. So I mean, it's failed. Could be the case that we just drop, or we do move up again and fail, and then make that move back down. But yeah, I mean, volume's completely tailed off, so it could be the case that we just fall down. Still got that 200 at the top there, so it could be the case that we get that push right up. Double top, yes, you can call that double top. It's not quite perfect or ideal, but yeah, kinda. It's still yet to really complete that top, really, that second top. It has gone up, it's failed. It needs to come down to this level back here for it to create that double top. For now, it's that structure that we just took off. At the moment, it's still yet building. Needs to come back down to do a double top. At the moment, that's what it's moving within.
Let's talk Tim Cook. Sure. I want to talk about the kind of the reduction we're seeing in his
Yeah, we'll see. That 200 still at the top, so I mean, it could be the case that it makes a sharp push up to that level and then comes back down. So if it was to turn around, it would have turned. It would have turned around a bit deeper over the course of last night. So we'll see. As soon as Bitcoin hits its resistance and starts to turn around, everything else is just gonna go. So all eyes on Bitcoin. Dollar index just well all over the place, to be honest. So we'll see where it ends up. Need a nice push back up, realistically. But yeah, we're seeing some nice volume coming in. Nice uptick.
My question around that is like, who is the Apple executive group? You know, to all these people earning tens of millions of dollars each year. Really importantly, though, the proportion of the compensation that is performance-based stock rewards is increasing from around 50% to 75%, and will be reflected that way going forward. So, do a good job, Tim Cook, and you'll still be well paid.
Yeah, I was going to say also, like when you're looking at your peers, are you also taking into account stock comp?
Right, and one thing I would say as well, like think about the environment we're in with Apple right now. Okay, they are not doing layoffs per se, but in November, Bloomberg reported that they would freeze hiring outside of the R&D space. You know, we're waiting on earnings, but the last 3 months of 2022, calendar 22, you know, everyone on the street started to revise their full year units forecasts because of supply chain disruption, but also a lack of demand at the lower end. It was not straightforward for Apple. December was the worst month for the stock going back to May of 2019. They don't say that in the regular.
We need a spike up in sell side. Come on, give it to me. At the moment, we're just not getting it. We need that supply to really spike up to move things back down. So at this moment, we're going to continue accumulating. Push up, push up.
Forecasting revenue that's below guidance, or sorry, below forecast from the street, and they're cutting capex modestly. And the narrative is around sort of weakness in the first half of this year and a slight improvement in the second half. But that for me was interesting. Why does that justify a big jump in the stock? I think there was a lot of emphasis put on what they were talking about, the auto industry, and now TSMC and others being able to supply these very basic processors and chips, which has been a real problem for the auto industry. That at least is one market where we'll see growth for some of these chip makers in this calendar year.
Oh, do you mean a double top on DXY or AVAX? Or do you mean have a look at DXY? Oh yeah, double top. Yeah, I see what you're saying. Yeah. This is where it's going to potentially come down to at the moment. Testing that level. Got another order block there. So it's a decent amount of support, yeah. We'll see how things kind of holding up. Yeah. Had a very, very, very nice push up. Very nice push. So slowly switching. But I mean, we'll see. And we are getting that volume peaking. Getting lots of volume, so could see a very, very nice turnaround soon. Remember, this level here is where that 200's held. Okay, and we are edging closer and closer and closer to it. 618. See if it holds. Ba, 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 da, ba, ba. Okay. We had to make some adjustments just to be on that safe side. 318, 382. I mean, yep. It's going to be interesting, this next move, that's for sure. So overextended, this move is ridiculously overextended. Crazy. Bam. peaked.
Warrington maybe buy Tesla, General Motors, and Ford down sharply, down 5%. Now, one possible boost for stocks that could help to explain 2 up weeks in a row for the S&P 500 on the year starting off, is that you have yields starting to come in. Now, they're not plunging in, but they are creeping down. And at this point, you have that 2-year yield at 4.15 below the 100-day moving average, suggesting that maybe it's going to try for that 200-day moving average and drop significantly on the idea that maybe the Fed is going to, I think the pace is pretty determined that it's going to be slower, but then maybe the terminal rate, that battle between the Fed and investors, maybe that investors are going to win. We'll see. I would bet on the Fed on that, but this chart does suggest yields are going to be coming in. As for one sector that is just absolutely stunning on a year guy, Delta down a little bit today. Their quarter, the results for the quarter was good in terms of demand, but first quarter profits are going to be hit a little bit by rising labor costs. Take a look at these airlines on the year. This is just 9 days of trading, and you could say that this could be a rally for the year, but a big bounce back so far. I guess the question is, will it continue? It seems the demand is there.
Sellers are starting to come in.
Can't believe we talk about shares taking off, or at least going down that road. Abigail, thank you very much indeed. Abigail Dillard from what's happening in these markets. Well, let's carry on the conversation about what's happening with the airlines. The stock performance year to date, absolutely stunning. But are the numbers there to back them up? George Ferguson, airline and aerospace analyst of Bloomberg Intelligence, joining us now.
One last push.
Because I think it may be emblematic as to what we're going to see from
Starting to see that spike up in sales. Very nice.
top line is good. There's clearly demand.
Profit taken.
Ongoing pent-up demand for travel. The problem comes in the middle of the P&L. The problem comes with
Come on.
because it looks like costs
Get in there.
increase and stay sticky. If you're an investor in the airline sector, therefore, which number do you look at? Do you look at the top line, or do you look at what's happening with margins?
I think I always look at margins, right? As a analyst investor, I always want to see improving margins, and I always want to see profitability, right? Whatever falls out of the bottom of a company in profits is what makes my investment in that company more valuable. And so, yeah, the challenge here is totally going to be how do they recover the increased costs, for the pilots, right? Pilots have an 18% increase on the table and 5% at the end of the year. Look, I mean, definitely the numbers we saw, yields look pretty good. So, that's synonymous with ticket prices. So it does look like there's good demand. But look, I think the right level of demand in the marketplace is a level of demand that supports profitability. And so, we've had higher costs in fuel. We have higher costs coming with labor, and fuel looks like it's going to relax a little bit. I'd argue that probably the market needs to see a little less capacity next year to even firm up prices more if they're going to if labor's going to get this kind of gain from the company. Yeah.
George, I'm wondering why the stock is down. I know the reason, but I'm wondering why everyone was surprised by this. Like, didn't we know that higher labor costs were coming? Like, what was the whoops here?
Yeah, I mean, we do, and so we know what's on the table. Actually, Delta may have guided a little bit lower than they think what they can do. I was pretty surprised at the guide, right? So I thought the guide was pretty low.
Yeah, what is it, 15 to 40 cents? I think the market was looking for 59 cents in terms of the guidance on EPS going forward. So, yeah, maybe a little light there. I'm assuming, George, that also this amazing rally that we've seen in some of these share prices over the last few weeks since the beginning of the year is also part and parcel of declines we're seeing today. How much more can you get out of these companies? What do you make of that rally?
Yeah, I think coming into the year, I think investors were hoping that, again, demand would hold up, right? And maybe if the Fed is done easing here and we don't actually get pushed into recession, the U.S. economy looks better than we all thought. Demand holds up and profitability is better in these companies. But again, that remains to be seen, right? It remains to be seen how much the consumer is going to pull back in the face of these higher interest rates and a slowing economy.
So, George, with that, and we're seeing Delta take a hit today, what is the best airline stock to own in this uncertain environment? Like, who is going to have the pricing power or going to maintain margins? And who is going to have that top line?
Well, so I would tell you that what's concerning is coming into the year, we would have thought that the fundamentals for, the financials for the big full-service carriers, United, Delta, and American, would be would be best suited for this market. We think that business is still coming back. That ought to be a tailwind. International markets are still reopening. There were some great yields in here for some of the international markets, especially Asia Pac. As Asia Pac opens, demand ought to increase. And then we ought to get some good fares out of that. So we would have thought the full service carriers were well positioned, and we thought there'd be a lot more competition for the low cost, for the low cost carriers, leisure flyers, especially domestic. So it's a bit surprising, I think.
George, Ed Bastian talking about over at Delta, talking about the fact that he thinks that the FAA needs to spend more money on ATC after the issues we've seen this week. Does he have a point?
He does. I mean, you can't have a ground stop for everything in the country. You can't do that many times, right? That definitely doesn't help business. But what company doesn't need to spend more money on IT? I would say, though, that's the challenge in life, is right, the priorities. So.
Yeah, exactly. Who doesn't want to have a better system, but still really antiquated? Hey, George, really appreciate it. Thank you for the update. George Ferguson and Bloomberg Intelligence joining us on the airlines. All right, coming up, big banks, they're seeing the headwinds in 2023. Bank of America's analyst call is currently underway. The latest headline here is that they see mid-single-digit loan growth coming out next year. We're going to get the investor takeaway now. Cole Smead, Smead Capital Management President, is joining us next. This is Bloomberg.
Yeah, we're starting to get a nice stack up of supply. Yeah, we're still looking for things to kind of move up here and then really start seeing the supply spike up. At the moment, we're still getting pushes up in buy side, partly for taking profits. As you can see, we got wicks on the top. Okay. Kind of came down on this one and again came down again, seeing the spike up, so should see it push up, start seeing those sell sides really spike up heavy, so all the way up here, and then make a move, turn around. That is what we would love to see. So yeah, we'll see what's happening. Looking juicy, let's go. I agree. Only a matter of time. Well, more than likely to get a break, push up. You just want to see, get that spike in the upper sell side. Supply really does need to get dumped at that point. Just be careful of the overextension. Okay, I'm going to try and squeeze as much out of it as possible. Is that better? Do you mean these two here? That's just mapping out where the 200 moving average on the daily is at, and that's all. Yeah, it's just where the 200. So we'll see.
Japan's Prime Minister Fumio Kishida will seek public support for his new security strategy today from President Biden. The two leaders will meet at the White House. Several weeks ago, Japan announced a radical upgrade of its security policy. It includes a 60% spending increase and plans to acquire missiles capable of striking China. And in Germany, the economy probably stagnated in the fourth quarter. That is easing fears that the war in Ukraine and inflation have triggered a recession. For the year, GDP rose 1.9%, just ahead of the estimate in a Bloomberg survey. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg Guy.
Right, here it goes. Is it going to hold this structure?
Bank of America now taking questions from analysts. What are they saying? Let's find out. Bloomberg's Wall Street reporter Sonali Basak has been, as ever, listening.
1, 2, 3, continue.
A few things to keep an eye on here, Guy, and it's
There it goes.
money moving forward, which is the Bank of America. Oh, yeah. There's a lot of focus on consumers still being pretty Bank of America is saying that you're even still seeing consumer spending consistent with a 2% growth environment and low inflation. So with that said, it's credit cards. It's the credit card businesses, which is why you're seeing them kind of shake off this idea that charge-offs are rising a bit and provisions and reserves are rising. Reserves are building, those provisions for loan losses are rising. I will also say, if you think about just how sluggish the last year was for investment banking, you have to think at this point the only way to go is up. You have in the hundreds of millions some businesses, actually underwriting at Citigroup, for example, less than $150 million. I mean, these are kind of peanuts for these banks if you think about how sluggish the business has been. For that number in particular, down 68%. These numbers are down more than 50% for almost every single business line. So that is somewhere where if you look at JP Morgan, who says not only is the pipeline coming back, it's challenging still to convert those, but the pipeline is coming back.
Get ready.
Open for business with leveraged finance. I think this idea that the banks want to take on some risk in this environment despite what their view is on the macro is a very important dynamic when we think about the uncertainties of the year ahead.
Seeing some nice pickup, slowly but surely.
To capitalize on that. An okay consumer with some clouds, an investment banking bottom, and a trading arm that's still super solid and taking on more risk. Who has the runway?
I think you have to look both at JP Morgan and Citigroup for two different reasons. One,
New 15-minute candle. Last 15 minutes on the hourly.
showed the biggest percentage jump increase, but remember they had a somewhat smaller base that they were going off of when you looked at their fixed income business.
Could get it in this 15 minutes.
At JP Morgan, that was a miss, but at Citigroup you had a huge beat, a record really performance there, stunning really.
Let's see what happens.
Shows you when you look at the value at risk rising for JP Morgan, again they are willing to take on risk. The markets are still volatile. It's going to be interesting to see, as we've been talking about all year, how the rates, currencies, commodities, businesses start to fuel these businesses moving forward. Jane Fraser in particular in her statement pointed out that what she's trying to build is again a bank that is good in many different environments. Huge card business, huge trading business, and I've got to say the other thing that's kind of on their side here is the fact that the valuation has plunged just so far for Citigroup. They're trading at half their book value just about, and they're still saying that their phase 2 of their turnaround plan doesn't even start until as early as next year. So they're early in this turnaround.
Yeah, let's see where it can go from here.
Are the ones that both JP Morgan and Citigroup in particular can lean into.
Great analysis. We will get more. You're going to go back to listen to the calls. We'll get more from you in the next hour as well. Bloomberg Sonali Basak joining us. All right, remember we have a Wells Fargo CFO interview that's coming up today at 4 p.m. New York time.
Alright, here we go.
All right, for the trader and investor
So I'm going to go and attempt to break top again.
holds Bank of America and JP Morgan in his portfolio. I'm looking at Bank of America down 1.5, JP Morgan now trying to climb in positive territory. Cole, do you like these numbers? Do you buy the dip here?
Well, I mean, overall, Alex, what we find interesting is, the theory of Fed raising rates, asset markets falling apart, and then something breaking has been it's been a fallacy. It's been a myth to a certain extent. I think if you look at the comments coming from the CFO of Bank of America, he said credit card delinquencies are drifting higher, which means they're just kind of moseying their way. That's not a jump. That's not a tectonic change in the credit card business. So I think
Here we
when
go.
we look at the economy, because these banks are just kind of a derivative of what we're seeing in the economy. What's interesting is, can these banks get in a lot of credit trouble tied to consumers when the best wage gain in America right now is actually the lowest income? Right? If you look at the Federal Reserve Bank of Atlanta data, they would tell you that the lowest income is actually seeing real wage gains more than anyone in America. That's usually who gets in trouble in terms of credit. And it's really tough to get in credit trouble with those kind of folks versus, wealthy people are getting hurt in the stock market and the bond market. At the same time, they have the highest amount of checkable deposits they've ever had in their existence. And we still have not spent down the savings that we built up over the last 2 years.
Cole, that's all great, and from a top-line point of view, that all kind of works, and I guess from a risk point of view, that all works. Just things are getting more expensive for the banks. They're having to pay more out on deposits. Jamie Dimon was warning about that. The cost of hiring people is going up. Where does the risk lie sort of operationally in terms of how the margin story is going to develop? What does that look like?
Yeah, it's a good question. So when they say things are getting more expensive, I mean, if you're Bank of America, for example, we actually just profiled this in our last webcast. I mean, the cost they're paying, 1 quarter ago was like 11 basis points on the high end. So let's just say, guy, that doubles to 22, 25 basis points. That's a huge pickup. At the same time, relative to what you could lend the money out to the government on 2-year treasuries, it's a dream.
Here we go, break it out.
Is like you look across their credit book, they're going to have credit risks increase just over time, just naturally. That's a pretty natural thing, I think, at this point. At the same time, the spreads, they're being compensated for that in the spreads. Think back to like late 18 when we had a stock market fall off and the Fed was really worried about how that would affect the economy. There was no spread to compensate you like you have now. So I think it's a vastly different world where these folks have an interest to lend many places on a 2-year basis to cover their risk that could increase.
I gotta say, I'm making 4.3% on my Marcus account. I don't know if a 22 bip increase is really gonna do it for me, but point taken. Where, though, do you think that ROTC targets are too high for these guys?
So how we look at this, Alex, is you go back to, I think the tectonic shift of rates is what people aren't thinking about. In other words, their return on capital, they were already overcapitalized coming into this, okay? And this is not a capital issue. That's what we dealt with coming out of 08, 09. We had to figure out how much capital they had to build up. And then the question is, will they ever produce a return on capital again, return on tangible equity? Today, it's not a question of capital. At the same time, it's really, people want to know what are they going to make. But the multiples have backed off too. So using Bank of America, you're not sitting that far off a book compared to being, year. And so, or last 2 years. So I look at it as based on what you're going to get. Let's say
Buyers are very much struggling though. Very, very, very much struggling.
like Bank of America or JP Morgan, and you're not paying much more than book. How attractive is that relative to owning a stock market that's just doing terrible? I think it's really an opportunity cost game. Banks look like they're going to make good money over the next decade, and we're just not that optimistic about what the S&P 500 can do in comparison to that.
Okay, let's break that down a little bit. Which banks do you like, and which assets in the banking sector do you like? And I bring in kind of the credit side of things here as well. Am I buying credit over equity? Yeah. Am I buying JP Morgan over Citi?
Well, yeah, just broadly speaking, kind of our framework for the banks has been the investment banks are going to suck for a while. I know they think there's going to be a pickup. Pickup will be where people need to raise capital because they need it. That's those investment banks. But we're not going back to where we were a year ago, a year and a half ago. That game's over. Wall Street sold the products they could sell while the mania was going, and that's pretty typical. So we're really most interested in the commercial and consumer bank side. And that's why I mentioned those stats on the consumer earlier. We just think that's the game. And right now, Guy, another place that you have nothing going on, mortgage banking is just quiet and dead right now. And people are very negative about housing because of the where we're at, where we just went to on mortgages. But that will also pick up. So there are things that they could benefit. But again, the wealth management business, how would you want to be in the wealth management business while stock and bonds lose money right now? The amount of money raising in asset management at large was halted sultry last year. So again, the things that were the strength, the wealth management, the investment banking, those games are going to slow down a lot, and they won't go back to where they were in multiples and earning power.
So, Cole, it seems like you're definitely more positive in the consumer. Where can you get the best pickup for that?
Well, I would say, we look at Bank of America as really the biggest consumer touch.
Come on, we need to get up here.
To your point, we don't own Citi, but they have a big credit card business. JP Morgan, we think of it as less consumer oriented compared to Bank of America, for example, in our portfolio. So, another one out there, Alex, we own Credit Acceptance Corporation, which is going through quite a spat with the CFPB right now. That's subprime auto lending, okay? That's really at the consumer that's winning right now. So we look at that as like the bottom quartile of income. When you need to get a car, who's going to provide you that car, and who's going to put together a lending program that the dealer's not going to screw you with a bad car? That's what credit acceptance does. So we like this economy. We like that kind of consumer because they're the person that you go to get your food, and they're hiring 5 of them, and they can't find any of them.
On that note, Cole, let's wrap it up. There is this expectation that the Fed is going to be cutting rates at the back end of this year. You're describing an economy that doesn't need cuts. What's wrong here?
What's wrong?
What volume indicators? Well, this one down here.
They want to cry and tell everybody that the Fed needs to help them.
I've got VPVR, as you can see here. That's this one. And then I've got your normal volume. This one, yeah.
So everyone's praying for a buy the dip, lower rates, and the reality is, I beg your pardon, but this stock market never promised you a rose garden.
Volume.
On that note, have a great weekend, Cole. Lovely to speak with you as ever. Thank you very much indeed. Cole Smead.
What's it called again? VPVR, no. VRVP, that's it. Visible range. Visible range, volume profile, that's the one. So that's the 2 ones we use. Do you mean this one? Accumulation, distribution. It's this. Where is it? I don't know why it's not on there. It's this one. Yeah, that's accumulation distribution. So I use accumulation distribution when things are in a range and I want to see kind of what's happening in there. So as you can see here, you're getting some accumulation distribution. Okay. It's loading up, that's what it's doing basically. I'm adding that to my chart, yeah, pop it in, mate. It's useful when you're looking at kind of tops and bottoms and when things are kind of ranging. It can give you a little bit more insight as to if things are at the very top. So let's say if we go all the way back, let's say for this segment, right? Yeah, you see here we're in a wider range, right? Can you see how we've got distribution right there at the top? And we've got some more here, just here. Nice indication, coming down. And then this is all accumulation again. Distribution. See how we're still here at the bottom. And we've got more. We've got distribution, distribution, distribution. Yeah, that's where it's indicating to you that the institutions are ramping up shorts to go down.
Europe can maybe avoid a recession. Deutsche out with a call on Germany today. Thinks it's going to skip a recession. How much of that is down to what
Yeah, it can be very useful. Yeah, we only use it in that situation though. It's a very, very last thing that we do. We just kind of just stick to price action more so. But that is really the only indicator that we use. We don't use stochastics, we don't use RSIs, none of that. Yeah, got moving averages, just nice and simple. But yeah, you can use it on lower time frames, you can use it on higher time frames. It gives you a lot more information when you use it on higher time frames, so just bear that in mind. So you kind of want to stick to between the weekly and 4 hour, mainly these two, but the 4 hour also kind of gives you a nice amount of information as well. But yeah, mainly on the higher time frame. You can use it on the lower time frames. Just check what's happening. But yeah. Oh yeah. Alright. Should be able to get a break sometime soon. If not, got a little bit of a double top here. Looking good for a next leg down. Ooh. Have I ever thought about creating an indicator? I mean, we've had people ask us creating indicators, creating bots, all of that sort of stuff. I mean, yeah, we could do, but there's indicators already out there that we kind of use, so I don't think there's going to be much value. Unless I'm trying to create something that's completely new, which I'm not gonna lie, that's going to be very time consuming. So yeah, I mean, all the good indicators are there ready. What sort of indicators are you thinking of creating or wanting, or thinking that I could create? Yeah, maybe you're thinking of it or at it from a different angle than I am. So, yeah, describe it a little bit more to me.
Friday the 13th of January, European stocks don't care. They are doing well. We are having another strong day. We're up by circa 2% this week on the stock 600. Many of the sectors significantly outperforming that number. The only sector that is maybe causing a few problems today on the downside, the car sector. The autos are really running into a little bit of trouble today. We're going to talk about that in a moment. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Yeah, are you thinking of building an indicator in terms of telling you where to buy, where to sell? I presume that's where you're going with it.
Europe today. We'll talk about that in a moment. Let's talk about some of the other stocks we're watching. The Kindred Group. This is a betting group, and we've just had a football World Cup, a soccer World Cup, as I'm sure Alex Steele would call it. And the problem with the soccer World Cup is that it's just one tournament. All of the other games that people normally bet on weren't happening, and that had a meaningful impact on their numbers. Kindred down by 15.73%. So some single stock stories that are worth focusing on. But Alex, I think the main one is that car story.
Yeah, and also just earnings in general, right? I mean, my cold open last time I was looking at planes, cars, and banks. So the S&P miraculously is only down 0.2%. It found some support after that UNISH number earlier in the last hour. It's a prelim read, but really quite strong. And inflation expectations for 1 year also moving lower. Lower gas prices, everyone's feeling a little bit better in the short term. So to Guy's point, here's how we're shaking out in the U.S. The KBW
I'll take a look at it, to be fair. It could be like a little project for me, so yeah, I do like having things on the go. Yeah, I'll take a look over potentially doing that over this weekend. It's a fresh year, so yeah, let's try anything really. You never know, I might come out with the number one indicator. A little bit of a top here. Still slightly accumulating though, so we've come down, obviously tested this level of support, yeah. But yeah, Shark, I'll have a look at it over the weekend and see whether I can work on something. But yeah, I mean, it's been something that we've been asked to do for people, as well as bots. So yeah, I mean, at the time we had kind of a bit consumed with a whole load of other stuff, so we didn't have the time to do that. But yeah, I mean, we're still very much consumed with time, but I guess we can do something on the weekends. Ooh. Making a little bit of a deeper. This is exactly what you want to see. We've got some accumulated sell side. It's looking good. And can you make a better support and resistance in terms of what you mean, support and resistance? Just your standard support and resistance kind of trend line, do you mean? Okay, I got you. Alright, well, to be fair, I mean, that's not a bad shout, in all fairness. Yeah, we'll have a look at it. Could be something. Could be onto something there. Realistically, all that you really want, I mean, support and resistance is really just on the higher time frame. That's all that you can really use, support and resistance. Where are the key levels of support and resistance on the high time frame? So like places like this, or places where prices have obviously kind of rebounded off several times, broken through, etc. Somewhere like this. Yeah. It's more supply and demand zones. That's what you kind of want. Yeah. I'm going to have a look at it anyway. We'll have a look into it. Yeah. We'll have a little look at it. See what we can do. Could be the case that we can come up with some good indicators. Some good new indicators. Make it an exclusive indicator. That'll be nice. Right, so we're going back up, testing kind of where the bottom of the range was held at. So see whether we can push straight back into it. Got the dollar. Dollar really is all over the place. It has no real clue as to what it wants to do. I mean, building on some a bit of bearish structure, yeah, could be that we just get a nice another move down, spike up. But yeah, it's really struggling to find support at the moment. Really, really struggling. I just want this test. Just give me the test of the zone, and then we can just move on. And I can enter some new shorts, but that's where we're going to. Hopefully, anyway. Just free for the shark. Yeah, you can have it for free, my man. You can have it for free. You came up with the idea and suggestion, so definitely. Right, so got 22 minutes until the last half an hour of the European trading session begins. Yeah, let's see if we can get anything here, really. I mean, buyers are struggling. Well, they definitely struggled here. Sellers are starting to kind of put in their orders. They will continue to put in their orders anyway. So yeah, starting to get a switch up. See if it can push up, hold this level. That 200 moving average just there. Could be the case that we maybe get something just like this here, where we actually just breach it. Okay, we breach it and squeeze out all of these traders, and then just absolutely kill it off. So you do need to be careful of that. Just be wary that, I mean, manipulation, especially at this point, especially at turning points, is very, very, very likely. Yeah, I just want to test up, yeah. Right. But yeah, guys, right, we're going to leave it there. Prices are kind of pulling back here. They're going to accumulate again, push up towards. Realistically, we should get, at the very least, a test of that 200. But we'll see where things kind of go. It is Friday. You are naturally going to see a tailing off in volume, okay? So it's just whether it's got enough volume to make that push. If not, probably see a little bit of a deeper retrace and then a test of it. I just don't feel like it's going to fully turn around until it does test it. Still, I mean, we got definitely a huge spike up in volume. That's without a doubt. But I want to see that supply spike. So could be the case that we hold this level here, accumulate, make that push. But yeah, that's where we'll be looking for, kind of really starting to spike up in supply and taking over, and then making a move back around. No, bro, good stream. Thank you very much. Always a pleasure hosting for you, Shark. Beautiful. Thank you for joining. Yeah, I presume it's night time over there for you. So good night. And yeah, see you tomorrow. We'll potentially, depending on price action, we'll come live on, well, a bit later on for that New York close. But yeah, we'll see where things are kind of left off. But if not, we shall touch base with you on Monday for a brand new week. Enjoy your weekend. Enjoy the rest of your Friday. We'll bring out some market updates on the weekend. They will only be premium member updates. But yeah, 2 a.m. Yeah, you need some rest, mate. Get some rest. Yeah. Enjoy. See you soon. Take care.